This is going to be a trade review for trading plan number 2. So in that particular video, I mentioned that we were looking for Monday's high on NQ and the rejection block of the Monday's high on ES. We met the objective during the London session, which means during the New York session, we probably have to sit on our hands and be a little bit more patient. Just by the 6 hours chart alone, you can see that we are trading within this down close candle for ES. Therefore, order flow has not been changed because we have not closed above this down close candle. Order flow is still bullish. Order flow is still bearish on the 6 hours, but we are in a accumulation or consolidation profile. During accumulation or consolidation profiles, I tend to look for highs and lows of the previous session, which is 6 hours candles highs and lows, or highs and lows of the previous quarter, which is 90 minutes candles highs and lows. Let's take a look at the 90 minutes. Right, so during the New York session, I'm basically focused on 6 hours to 12 o'clock. I'm gonna highlight it for NQ as well. So I want to see if there is any SMTs between the 6 hours sessions, which means did we take out London's or Asia's highs and lows and the other asset did not and left it open. Did we do so? In this particular scenario, we don't have a SMT on the highs or on the lows. It's pretty much symmetrical. So I will have to drop down into the 90 minutes quarters to see if we have any SMTs available at that point of time. So sitting on the desk at 9:30, the price action presented to me was this 3 down close candles. This particular candle is still printing, and this candle starts at 10:30. Okay, so we have these 3 down close candles, and to me, obviously, order flow looks bearish. We have traded into the rejection block of Monday's high, and then it provided 3 down close candles. For NQ, it has traded above Monday's high, and similar to ES, it has provided 3 down close candles. So we are really bearish. We have closed below the last up close candle, 1, 2, 3 consecutive up close candles for ES. Same thing for NQ. We have closed below 3 consecutive up close candles that took out Monday's high. So to me, this is a change in the state of delivery. Order flow has changed to bearish. So heading into the New York session, I was looking for sells and I was looking for SMTs on the highs. If you take a look closely, you'll see that between Q2 and Q3, we have SMTs. Right? And when you go down to the 3 minutes time frame, I'm going to segregate them into quarters. So this quarters is from trader day. This is his quarterly theory. Right. So as you can see here, this is the quarters Q2's high, Q3's high, Q3 is high, Q2's high. So we have SMT between the quarters. Okay, that is number one. Number two, you want to see SMT between Q3 and Q4. Okay, so this is the key here. Based on my observations, I find that Q1 and Q2 SMTs and Q3 and Q4 SMTs are more higher in probability. Seldom do I see Q2 and Q3 SMTs. Seldom that worked out. Okay, so I'm waiting for 10:30 and price gave me this two down close candles and this order block right here. Similar to, yes, we took out this low that made this high. So I'm watching to see, as price trades up above, do we form another SMT on the highs here to take it down to this level here? Because above this high we have a 90 minutes fair value gap. So I wanted to see if ES was able to make a higher high and NQ not able to do so. However, what we have was ES trading into this rejection block right here. So this is another form of SMT. Right, so to me, based on my knowledge, there are three forms of SMT. The first one is the one that ICT teaches, highs and lows. Second one is the one that Day teaches, Trader Day, candle body, and this one I think it is also by him, I'm not too sure. It's the perch on the rejection blocks. Similar, they're all SMTs. Okay, so right here, if you look at the rejection block for NQ, it did not tag it. So in this perspective, NQ made a lower low while ES made a higher high. Make sense? Now with that, after tagging this rejection block, we went ahead and closed below this swing low, validating this up close candle 1054 as a bearish order block. So this is where the model comes in play. I was looking for this swing low right here if I was trading ES, and I was looking for this swing low right here if I was trading NQ. On the higher time frames, ES was unable to take out Monday's high. On the 90 minutes time frame, ES was unable to take out Q2's high. So in my opinion, the best shorts should present itself on ES. So I went ahead and took a short in ES. I placed the limit order right at the low of this order block because, as you can see right here, there's a volume imbalance. On the left, there is a inverse fair value gap. So there are lots of confluence in terms of PD arrays. And this is basically what I did for yesterday's New York session. Alternatively, you can do something like this. SMT between Q3 and Q4's low. If you take a look right here, once it closes above this down close candle right here, which is at 1133, right? As you can see, this candle did not close above this candle's high. It closes right at the same value here. Right, let me zoom in. Right, as you can see, the most obvious confirmation was this candle right here, 1133. So 1133 NQ was right here. NQ on a higher time frame is more bullish than ES, so the best longs are going to be formed on NQ. So once we got the confirmation on ES, you can go ahead and put a limit order at the order blocks high or you can choose to utilize this fair value gap right here. For your entry to higher prices. Basically the previous quarter's high, this high right here. If you are going to take a long on ES, you're going to look for that 90 minutes fair value gap, which is above this high, somewhere around here, I believe. Right? So that's basically it for the review of yesterday's price action. If I was to take a short on NQ, I would need to use this particular up close candle, because this was the candle that formed the SMT between NQ and ES. So it's slightly harder to gauge for NQ. Okay. On the left, as you can see right here, you have an inversion fair value gap that could be used as a confluencing factor for your short idea. Right, so here is the proof. Right, so my short entry 5528.5, the low of this up close candle 5528.5, exit 5518, exit right here 5518. Okay, and that's basically it for yesterday's business. I hope you enjoyed it, and I'll talk to you again. I'll probably upload something for today's forecast as well. Alright, thanks for watching.